Just before we move on to the next stage, I just would like to mention that today's session is delivered to you by A to Z Forex and sponsored by CFI Markets, which is one of the very few A to Z approved Forex brokers. And it is recommendable, at least for you to go out and check the platform and see if there is anything interesting for you. That being said, as I promised, I'm going to be very fast touching base on euro dollar. And if we look into daily time frame, this is a Fibonacci wave that I have drawn. Let me change the color. And if you look at the euro dollar, basically two things will catch your attention. Number one, according to the True Fibonacci Wave analysis, today's lowest low was basically falling in line with 61.8% Fibonacci retracement zone. And that being said, besides that, the overall market move for the last entire year has been shaping up kind of like a symmetrical triangle formation. I'm not really fond of trading any kind of formations, but this formation has a significance for me for the fact that it defines a dynamic resistance and support levels. These are dynamic. It means these resistance and support levels have been moving. It's not stable like you would consider in general. So where can we expect the market reach to from current level, and what could we be expecting overall? That would be the major question, I believe, for every trader. So looking into the market, it is obvious that we don't have any trend. This is daily time frame, but when we move on hourly time frame, things get a little more clear. The yellow highlighted level that I have over here defines the kind of like a pivotal level. It is not the pivot level, but it is pivotal level. It means the market gets to be shaky each time it touches to this level. You can see how it is in the market so far. Anytime that it has touched it, it either reversed or it basically found another direction. So overall, my expectation is that the market should be on bearish trend still, as you was mentioning. But my bearish trend is basically happening from the 1.1270 level. It's because of this specific candlestick formation over here. And my target would remain all the way back to 1.10 level for now. Bear in mind, there is a major fundamental development in Europe, which is called Deutsche Bank. And Deutsche Bank, I have been telling since November. And the first time I actually talked about Deutsche Bank being in trouble was June 2015. That time, I first started to short sell Deutsche Bank stocks, and it was $34.60 for the Deutsche Bank stocks. So since then, the Deutsche Bank stocks has depreciated by close to 66%. So they have only left with 33% of their stock value, and it is not the end yet. The reason why Deutsche Bank is so much under focus right now is because of the fact that all the toxic assets in Europe has some kind of tie to Deutsche Bank. Deutsche Bank failing means that European Union is failing. So any positive news that you will see regarding to Deutsche Bank will have a positive impact to euro, and any negative news coming up will have a negative impact on euro as well. And besides that, the biggest performer based on these news is actually the DAX index, the Xetra DAX index. It's the German stock exchange index overall. So take advantage of these moves as well. Now I'm going to be very briefly talking about the USD Japanese yen. So far we have seen funny market moves overall from the market. You can mostly see that majority of these market moves are taking place during the evenings or European evenings, European nights / US evenings mostly. And I'm referring to the New York evening. And this is because of the fact that each time markets see some kind of development on the presidential debate, you get to see a major development on the Japanese yen, US dollar, and USD Japanese yen overall. And if we look into the market, again, let me put it on daily time frame. So this is the trend line that I have drawn, combining the highest highs so far. And then there was another trend line over here, and there is another trend line coming up all the way from 2015. So if we combine it, again, for here as well, we can see a symmetrical triangle, almost symmetrical triangle. You can see the bottom over here and the top over here. But one major thing is that the Japanese yen cannot really accept to depreciate so much. And we know how Japanese yen is in general, right? The Bank of Japan and the Abenomics tend to intervene the Japanese yen, trying to make it higher and higher against, well, not Japanese yen getting higher, but USD Japanese yen getting higher, while Japanese yen should be at a lower value in order to boost the Japanese exports. For a country that is based on export-driven economy, it is essential for the Bank of Japan to keep the exchange rates low for Japanese yen in order to increase their exports. So at the moment, I'm convinced that any entry from the level over here, which is 99.48, 99.50 level, more or less, is the best entry. So I do expect at some point of the time USD Japanese yen hitting this level, and I'm completely bullish from this level onwards. So I believe that it is best to buy from 99.40 level or 45 level and look for all the way initially and minimalistically towards 102.38 level. It's almost 300 pips market move. Meanwhile, if you see that the market is not really coming to this level, for the coming days ahead, we can also aim to long the USD Japanese yen all the way from 100.13 level. It falls onto 138.2% Fibonacci retracement zone, and from this level onwards, again, I'm staying initially to 102.38, but my major and overall target for both of the positioning that I've just mentioned stays actually to 103.80 level, and that's 10% Fibonacci retracement zone. If you ask where can I find the 10%, this is custom Fibonacci retracement zone, so it's 138.2% and 110%. The next tradable instrument I'm going to be covering is the gold. If you have been following my analysis on A2ZForex.com, you can see that I gave an analysis where we said short gold from the level of 1,342 level, and we were aiming all the way initially to 1,318 level. So our aim has reached so far. We have made a massive profit. I hope you took the opportunity. So possibly you should have made a massive profit. And at the current moment, I do not intend to long or short gold. However, I do aim for a long entry from 1,304 level, 1,305 level. And from there onwards, I'm majorly bullish all the way to minimum of 1,368 level. So long opportunities from 1,304 level all the way up to 1,368 level, and stop loss of around $10 should be sufficient enough for taking the advantage of this trade opportunity.
And yeah, I do think that regarding the trading opportunities, you know, I do receive some comments saying, should I trade right now? No, I mean, should I buy or sell euro right now? Let's say, for instance, euro, or they ask about oil or gold. I would say I would wait, but I do receive the comments saying, no, I don't want to wait. I want to trade now. So should I buy or sell? That's the question. You know, so if you want to...
It just sounds like that psychology-related commentary. Basically, I have done this test quite a few times. I saw it in a documentary, and then afterwards I have copied it. Basically, what you do is that you get a $20 bill if you are in a group of, let's say, 20 people or so, and you say that I'm going to be hosting an auction, whomever, and it's going to take, let's say, until someone stops bidding. So the people start bidding from $1 bill or €1, and the rule is that whomever bids the highest gets the $20 or €20, and then whomever bids or whomever is the second highest bidder has to still pay money, but he doesn't get anything. In most of the cases, you get to, I mean, the auctioneer gets to double up his money. It's because of the fact that, you know, the people who are bidding do not really think of the consequences that they are entering into. And now the traders as well, when they want to, they're just asking the question to you, shall I enter now? Shall I enter now? They just want to enter for the sake of the feeling rather than thinking of the consequence behind.
This is correct. So if you simply want to trade, it doesn't matter. You can either sell or buy. So it would be considered trading. But if you want to trade profitable, I think it's better to wait.
Yeah. There is a question for you. What is the red moving average that you are using? What are the settings?
I'm using 50 moving average and 200 moving average. So the fastest one is 50 moving average. The slowest one is 200 moving average.
Thanks. So guys, the 50, 200, 20, 100, these are the major moving average combinations that you can use. It is in general assisting traders to find the price action developments. If you're going to be trading on 1 hour time frame and daily time frame, it is essential to use 20 and 100. If you're going to be using 15-minute and 4 hour time frames, it is essential that you use 50 and 200 moving averages.
Yeah, so the best strategy on the trend market for me is to buy when the price touches either 50 or 200 moving averages and the indicators start reversing. So you can clearly see it on, you can take, for instance, any currency pair or commodity which has a clear trend right now. So if it touches the moving averages and the indicators start changing the direction, especially when they're in oversold on overbought zone, that's the really nice ones. And then you go ahead.
Definitely. We have a question from Pule. How do I draw the Fibonacci on gold? Basically, I have combined the following highest highs and lowest lows. So this is the wave that I've taken advantage of. There is another question from JC De La Harpe. How do I use Fibonacci? Well, JC, you really need, well, it is not a question of one, or there is not 1 second or 5 second answer. You need to participate in a complete set of trainings, but to give you a better immediate answer, make sure to buy my upcoming book. It's going to be published in April. It's called Forex Not For Dummies, where you'll be able to learn the Fibonacci and my patented True Fibonacci Waves theory as well. And
yeah, it's not even a topic of one webinar, I would say.
Definitely not. We generally cover it, well, at least the True Fibonacci Wave. I can teach it in a session of 16 hours, 14 hours, but 14 hours, not 14 minutes.
Yeah, that's right.
When will your book be published? Munzurul is asking. It's going to be published April or May of 2017. So it's tentative still, but April, May, it should be one of those. So let's stay on the positive side. Go for May. All right. Okay, gentlemen. I think this is it so far. I have some questions for you. Just to better understand how long you have been trading, would you please answer these simple questions for me? How long have you been trading so that you could understand the overall demographics of the webinar? So just briefly to give you an idea, Yuri, 38% of the people who joined the webinar have been trading for less than between 6 to 12 months, and 23% of them have been trading more than 3 years.
All right.
So especially I'm very happy to see those people who have been trading more than 3 years to join these webinars. It shows it's never late to learn something new. and you know, participating with professional traders always give you the better chance for you to take advantage of it, especially for a trader like Yuri, who has been self-taught and reasoned the levels, you know, personally without having any big institution behind. Thank you so much, guys. Please just answer the last commentary about how do you rate today's webinar, and until next time.